Good morning, day traders, and welcome to Market Minute, a hedge fund trader's technical analysis of the stock market for February 18th, 2022. If you enjoyed this video, please like and subscribe. Let's get after it. So SPY still consolidating here within this wedge pattern. Increasing daily volume certainly creates the opportunity for this thing to break down under 435.50 for a move towards that 430 area. We're still kind of bouncing and relying on headlines here, and we're getting a gap up as the United States and Russia are going to have further meetings on the Ukrainian crisis. I still don't want to get too attached or too obsessed with any of these moves. And I think today, right, it's going to be very hard for us to restart or find a new trend going into a long weekend. So bearish bias here this morning with maybe more of a desire to want to sit on hands and kind of let this thing just chop about. Similar story here on QQQ, right? Increasing daily volume, but not exactly outlier, right? Still well below that average. Full body bearish candle, but now gapping up, right? Which sort of ruins some of that momentum we could get to the downside, right? No consistency here pre-market in price, news, and sort of gap up or gap down, right? We're kind of getting 1 out of 3 here, not exactly getting all things to sort of sync up. So if QQQ, right, can break down under this 343.60, we could have a path down towards that 330 zone, but it's a little bit challenging here now today. Apple, right, similar story, done nothing yet to invalidate this January 28th high volume hammer, right? High volume full body bullish candle. So still have a bullish bias here, even though this is kind of grinding down here on low volume, right? Hard for us to be bearish until this 165.60 area breaks, and hard for us to be bullish until that 173.50 breaks. So maybe more one to watch than trade today, but still holding up relatively well. TSLA, right, increasing daily volume, full body bearish candle as it sort of wants to test this lower trend line here around that 870 area. If we can get a breakdown under that spot, we start to have a lot of room down towards that 860, right, which is kind of that Jan 31st low, and then down towards that 850 zone. Underneath, right, the floor can fall out really quickly, and 826, 816, and 800 can come within sort of a blink of an eye. So we can afford to be relatively patient here on this TSLA and wait for that volume profile to kind of give us that outlier full body breakdown. NVDA, right, giving us maybe our best look here of the day. Channel breakdown, right, maybe can look like a very aggressive even bear flag here, with this sort of being the flagpole, right? But nice full body breakdown here, very good increasing volume. If you compare this to sort of all the other increasing volume bars that we've seen, it's the only one that's really significantly above average, right? So it's significant outlier strength after its earnings. So catalyst, right? Full day of selling price action, not a huge gap up, right? So if this thing can break down under this 241.50, NVIDIA has a lot of room down towards that 236, right? 235, and then even that 230 zone. AMD is going to be a bit of a sympathy play for us here. The only issue, right, is that volume is not increasing. So maybe this is a little bit of a warning sign, or maybe this is a little bit of a name that we can watch as a sympathy play if NVIDIA breaks down on strong volume. If AMD follows suit, right, we need to make sure that outlier volume steps in and really pushes this narrative to the downside. So that's how I plan on dominating today's action. If you liked this video, please like and subscribe. If you want to follow my day trades live, you can start your free credit card free trial at dtrtrading.com. Have yourselves a great day, guys, and happy hunting.